Now shifting focus, internet-based classifieds platform OLX recently launched in the Kenyan agricultural sector as more companies compete for control of the largely untapped market. Now the company allows farmers to sell produce in whatever quantities they choose, eradicating the need for middlemen and increasing market reach for many farmers. To date, the platform has been more popular with shoppers looking for cars, furniture and of course electronics. OLX offers sellers a platform to advertise their items to potential consumers who are able to compare prices from different sellers. OLX and other online marketing companies are seeking to cash in on increasing internet penetration as consumers move away from supermarkets to online stores. Let's find out more about the company's strategy. Peter Ndiangui, OLX's Kenya country manager, joins us in the studio now. Welcome to the studio, Peter. Now, of course, as we mentioned the experts say that Kenya's retail industry is shifting away from shopping as we know it into different areas of the market. For example, black market proved to us that things are changing in the market. Now, with the huge competition, where is the money being made? And suddenly, how is OLX finding its place?
Sure. I think maybe we start by understanding why the shift. I think the shift is quite a natural one. It's basically that when the alternative is almost nothing, then people go for where the alternative is. What I mean with that is that already the retail infrastructure in the entire Southern Africa is quite inadequate. If you, for example, look at a city like Lagos with 12 million people and about maybe 5 shopping malls. And so therefore, if you look at, for example, compare retail space per capita in the US versus Kenya, for example, is 20 times more in the US. So retailers find themselves with very expensive solutions for physical retailing. And so therefore, movement for those retailers to go online is quite natural, that they choose to go there because it's cheaper for them, and that the audience now is shifting and is starting to go online. It's just natural for them to meet there. So this shift is going to continue, and it's almost happening at the same pace as the mobile telephony. If you remember, before mobile telephony, the penetration of phones in Africa was almost 1 in 1,000 lines. So the shift is pretty natural.
Right. Yeah. And tell me how OLX certainly is finding its place in the market, because unlike Jumia, you seem to attract a completely different market. And right now you're even looking to enter into the agricultural sector, which is something I don't think that we've really seen in Africa's market.
So first of all, I think competition in this sector is quite welcome, because this is a very nasty, this is a very nascent market. So therefore, the more the merrier in educating the users, in educating consumers to start thinking about how to shop online. Having said that though, what you'll find is that we operate a complete different business model, whereby we encourage a lot of consumer-to-consumer trading rather than just business-to-consumer trading. And if you also look at the variety of items that we get people to trade, they range from cows, cats and dogs to vehicles and electronics. So therefore, already we try to capture the African market from the context of its development. That today, 40% of the consumers in Africa spend most of their money on food. And so therefore, agriculture play is just a natural home for us to make sure that we are capturing the trade that is already happening rather than the trade that we are forcing to happen. So food trading is quite natural, and people just have to eat.
Okay. Would you say you're currently facing heated competition in that certain area in the market? Certainly we're seeing players like Jumia coming in and you know, really taking up a lot of different apps that existed in Kenya in different segments of the market. So what would you say about competition right now in that segment?
Yeah, I think competition in that segment is competing quite well, because the audience is still not that big. The market has still not embraced e-commerce in totality. If you look at the percentage of sales in retail that go through the internet, in Kenya, for example, it's about 2%. In Nigeria, I think it's about 1%. So therefore, I mean, before we even get to 20% or 10% of the share, which is, I think, the moment China has the highest share of online sales, which is something about 14%. It's still very, very early days. And so therefore, we can't rule out that in future we'll see consolidation, but I think this is very early days of development of that market. And so the more the competitors, the merrier in getting the market to start understanding the concept and appreciating how efficient it is, especially in sub-Saharan Africa.
Yeah. Well, many thanks for coming into the studio and giving us those insights. Of course, Mr. Peter Indiangu, he's a country manager with OLX Kenya.